What is happening, traders? Welcome back. I hope you're all well. In this video, I'm going to be performing a top-down multi-time frame price action analysis on Ethereum as requested from some of the members in our free Telegram group. So let's get straight into it. As always, we'll try and keep this video as educational as possible for you guys. So starting here from a monthly perspective, what can we identify from a monthly perspective? First and foremost, which direction is the market trending? Very obviously, we are in a bearish trend from a monthly perspective. This is the significant high. Ever since the market printed this high, we broke the higher low formation and formed the lower low. Okay, so we've got the significant high, the lower low, the lower high, the lower low, and a new potential lower high here. So we can clearly identify the market is still bearish from a monthly perspective. What we can also identify is price filled beautifully filled this monthly imbalance that we had here. During this breaking candle to the downside, from this wick low to this wick high, there was an area of monthly fair value, an area of imbalance. The market made a bearish impulsive move. Then the markets made a bullish corrective move, spiked into the imbalance, and ever since spiking into the imbalance, we've started to push in the opposite direction. So for me, I do believe this could be a new swing high here on a new lower swing high here on Ethereum, and we could see further continuations to the downside and a new swing low. If we now take our Fibonacci from the high to the low of the most recent bearish move, which broke structure to the downside. Obviously, we've got a break of structure exactly there. We've got a monthly bearish impulse. We take our fib from the high to the low, and what we can identify, the market retraced into the 0.382. We spiked into the fair value gap, and like I said, we've been pushing to the downside ever since. So we have a valid impulse correction continuation pattern here from a monthly perspective. If we want to gauge a downside target, according to the Fibonacci, we take our fib from the high to the low of the corrective move, and our downside target for a potential new swing low, sorry to be the bearer of bad news for you Ethereum lovers, could be all the way down at around 600, okay? Which is obviously a significant decrease in price. What I've also identified, what I've just spotted here, by the minus 0.272 Fibonacci extension target, we have an area of monthly imbalance. From this wick high to this wick low on this breaker candle, that is an area of imbalance, and that should get filled. So that is a significant move to the downside that we could potentially see here on Ethereum. What we can also identify from a monthly perspective is we have unmitigated monthly order block, unmitigated monthly demand exactly at this level. So we have confluence here. This zone should act as a magnet. The market should get attracted into this area to fill the imbalance and to fill institutional orders. What we can also identify from a monthly time frame, there's lots of information we can take from this monthly chart. If we draw a trend line here, we obviously have previous resistance, broke to the upside, turned support, broke to the downside, resistance, selling off, right? So just very simply by adding this trend line, you've got another confluence. You've got the minus 0.382, you've got a fair value gap, you've got previous ascending trend line support now acting as resistance. So I definitely expect this to be a swing high at around 2000 and then a new swing low maybe around 600. Now if we just clean the charts and drop down to the weekly time frame, what we can identify from a weekly perspective, okay, first and foremost, I can see beautiful equal lows liquidity here. Those equal lows are residing just above that imbalance that I've just mentioned, all the way down at around 600. Okay, so that gives us even more confluence to expect the market to take out these lows and get attracted into that 600 downside target. What we can also identify is we have this ascending trend line. Now, if you have a look at the price action on this ascending trend line, okay, draw your attention to the ascending trend line. We can see last week's candle closed with a bullish engulfing. We had consolidating market for about 4 or 5 weeks here. Above the consolidation highs, there would have been liquidity. the market has made a bullish engulfing candle, wiping out the buy side liquidity above the what this would have been a lower time frame consolidation. Okay, this move to the upside, last week's bullish candle, took out the liquidity above the highs. This bullish candle has also induced a huge amount of traders to go long. That's not long. To go long on this trend line, right? Buy one touch, two touch, three touch. Okay, let's buy this trend line. That's what retail traders are thinking. Okay, so this will generate a huge amount of liquidity below that trend line, which fits my overall bearish monthly bias. What we can also identify is this particular candle right here. This candle for me is key. Why? Because we had buy side liquidity residing above that swing high, which was a monthly high. Okay, the market here broke to the upside with a bullish engulfing candle. That bullish engulfing candle on the breakout of this high done two things. It's induced buyers into the market expecting price to break out. It's filled the monthly imbalance that we had here, which I've already shown you, and it's also stop hunted any shorts that had their stops residing above this high, right? So that's a very important candle because the next candle broke back down, right? We got the breakout, we got the break back down. This is a railroad formation, bullish engulfing, bearish engulfing. And this indicates a trap. This is a textbook trap candlestick formation. And ever since that candle has formed, you can see that we broke below the last higher low that pushed the market to the downside, to the upside, sorry, and we've been trending to the downside ever since. So again, here from a weekly perspective, I am bearish. What we can also identify from a weekly perspective is we have a bearish impulse from point A to point B. This bearish impulse broke structure. Specifically, we broke below this weekly swing low. So the market has made a bearish break of structure, a bearish impulsive move, and a corrective move. If we take our Fibonacci from the high to the low of the weekly bearish impulsive move, we can see that the market has retraced perfectly into the golden ratio. So we have a monthly impulse correction continuation pattern to the downside. On the weekly time frame, we have a weekly impulse correction continuation pattern to the downside. We've got trend line liquidity here. We've got double bottom equal low liquidity here. We've got imbalance to the downside. We've got many, many factors showing us that there is a high probability that the market is going to make a new swing low. Also, just remind you of that ascending trend line broke to the downside, retested twice. Okay, lots of confidence to expect lower prices here on Ethereum. Now, if we drop down to the daily, again, let's just clean the charts. Okay, down on the daily, we've got a similar formation to what I've just shown you on the weekly. And the formation that I'm referring to is this railroad, right? Again, what we had is buy side liquidity residing above the high of the previous week here. We spiked through that with a bullish engulfing, grabbed the buy side liquidity, boom, railroad back down, bearish engulfing back down. So I do believe the market is topping out here and we are going to break this floor sooner or later. The first target, obviously from a intraday perspective, will be the sell side liquidity residing below this low. But overall, we're expecting lower prices, right? I'm expecting around 600 to 800 on Ethereum, to be quite honest. What we're looking for is this low to be taken out, right? That double bottom right there to be taken out, this imbalance to be filled over here. So now to the important question: how can we be looking at potentially entering this sell opportunity? Now we've got the monthly, weekly, daily time frame all aligning for potential continuations to the downside. Now let's go to the 4 hour and see if we can find any significant levels of supply for us to potentially short from. Straight away, I can see a nice level of supply. So from a 4 hourly perspective, as I said, we grabbed liquidity above this high. We took the buy side liquidity, and then ever since we've shifted market structure. So we swept this high here, and then we broke below the previous higher low that created the sweep, giving us a bearish market structure shift from a 4 hour perspective. Okay, we have 4 hour high, high, higher low, higher high. So we have 4 hour bullish trend, bearish market structure shift. Okay, we have a 4 hour supply zone exactly here. This is the supply zone that created the market structure shift. What we also have is imbalance exactly there. So now at around 1680, we have a zone of confluence. What we could also do is take our fib from the high to the low of the move that created the market structure shift. we've got the 50% fib, which lines up quite nicely with the imbalance and the supply, giving us our optimal trade entry. So what I'm looking for here on Ethereum, if price comes up into this level, this is where I want to be positioning myself short. First targets is obviously the liquidity below all of the swing lows, so sell side liquidity, but I'm overall projecting Ethereum to go all the way down, take out the significant monthly low, and maybe tap into 600, 800, according to the Fibonacci extension taken from the monthly corrective high to low, right? All the way down here, which is obviously a significant move. So just bear that in mind, guys, when you're looking to trade alts. Obviously, alts will follow Bitcoin and Ethereum. Trade safe. I hope you enjoyed the analysis. Feel free to join our free Telegram group. The link's in the bio. If you would like me to analyze anything specific next, just comment below. Thanks, guys. Speak to you later. Take care.